Hi everyone, Oleg Tkach here with your weekly rate update. And this week, we started the week off with 3 days in a row where rates got a little bit better. Monday, Tuesday, Wednesday, all because of weak economic domestic data that has been coming out, and the Fed coming out and a few of their members kind of acknowledging the fact that the next time they meet, they're only going to do a 0.25% rate hike, which is what the market has been pricing in, which is what the CPI report last week when it came out pretty much suggested, and why we've seen rates get better all of a sudden. And so that kind of continues, and the Fed kind of confirmed that. Now, with that said, the last 2 days, we saw 2 days where rates got a little bit worse, mainly because there has been some strong economic data that has come out, and the stock market has rallied since then. And anytime the stock market rallies, money comes out of the bond market and flows into the stock market, which essentially hurts interest rates. So with that said, as we have earning reports are going to continue to come up, as all these different companies are going to give their guidance for the year as far as what they believe is going to be happening, as we have a lot of different companies that are starting to lay off. Anytime there's bad data out there that's not inflation related, where we're going to be seeing the economy slow down, that's actually good for interest rates. Anytime we have positive data, that's a little bit bad for interest rate. Anytime we have data that inflation's getting worse, it's bad for rates, better, good for rates. So this week, that's essentially what happened, where midweek we saw some good economic data, money flew out of the bond market into the stock market, which in turn raised rates just a tiny bit. Overall, when you look at where we started on Monday and where we ended on Friday, you could say that we kind of ended up the same place we started this week. However, there was a few good days, good lock opportunities. Now, with that said, the one thing I want to bring up to everybody watching, especially real estate agents, we've seen a ton of pre-approvals come in. A ton of buyers become active again. That spring market, that spring rush that we normally see, we're seeing it again this year. Well, what does that mean? That means we're back to some homes having bidding wars again. We're back to buyers not being able to negotiate as aggressively as they had been in November and December. And when you look at the fact that rates went from the mid sevens in October, end of October, and now they're down to, if you're very, very well qualified, the high fives, now all of a sudden, it's really put some pressure for a lot of buyers to get back into the market, which essentially is now kind of in this teeter-totter between, are we in a buyer's market or are we in a seller's market? I think in the next few months will show, but definitely not what we saw buyers able to get the last 2 months. I just want to share that with you. I'm sure you guys are noticing it as well. With that said, we do have weekend coverage. If there's anything at all that we could do for you, don't hesitate to reach out to us at 425-478-7676. Make it a good one.